Why banks don't actually store your money. You wake up, before you even get out of bed, you check your phone and your banking app loads, and there it is, your balance, $10,000, maybe $2,000, maybe $50,000. It's a number that feels solid, stable, safe. But here's the uncomfortable question almost nobody asks. Is that money actually there? Because the truth is far stranger than most people realize. Behind the calm interface of your banking app, behind the reassuring numbers, behind the words available balance, there's a system operating in the shadows. A system that only works under one very fragile condition: trust. And if that trust disappears, even for a moment, something terrifying begins to happen. Not in weeks, not in days, in hours. Because banks don't actually store most of the money people deposit. In fact, if everyone tried to withdraw their money at the same time, banks would run out almost immediately. But how can that be possible? How can billions of people trust a system that doesn't actually hold their money? To understand that, we have to go back to a moment when banking was simple. A time when money actually stayed where you left it. But that world doesn't exist anymore. This is money mechanics. Today, we're uncovering something most people never think about: why banks don't actually store your money. And once you understand how the system really works, your bank account may never look the same again. Hundreds of years ago, banks worked very differently. When people deposited money, the bank kept it. Simple. You placed your gold or coins inside a vault, and the bank stored it for you. Nothing mysterious, nothing complicated. The bank acted like a warehouse for money. And when you wanted your money back, you simply withdrew it. Your money stayed there, waiting, safe. But banks soon realized something strange about human behavior. Most people don't withdraw their money at the same time. Some people withdraw today, others withdraw next week. Many leave their money untouched for months. And banks began asking themselves a dangerous question, a question that would completely change the financial system. What if we use the money sitting in the vault to make more money? Because while deposits were sitting quietly, doing nothing, there were always people who wanted loans. Businesses, farmers, merchants, entrepreneurs, people who needed money now to build something bigger later. So banks began lending some of the deposited money. At first, just a small portion, but that small experiment would evolve into something far bigger, something that now controls the entire modern financial system, a system known as fractional reserve banking. And once you understand how it works, you'll start seeing banks very differently, because the money you deposit doesn't stay still. It moves quietly, constantly, sometimes in ways you never expected. Imagine you deposit $1,000 into your bank. Your banking app confirms the deposit, your balance increases, everything seems normal, but behind the scenes, something else happens. The bank doesn't keep the entire $1,000 in its vault. Instead, it keeps only a small fraction, sometimes as little as 10%, sometimes even less. The rest, the bank lends it out to someone buying a car, to someone starting a business, to someone taking a mortgage. And this is where the system becomes truly fascinating, because that money doesn't disappear. When the borrower spends the loan, the money usually ends up deposited in another bank, which then repeats the same process, keeping a small reserve and lending the rest again. Then another bank does the same thing, and another, until something strange happens. Your original $1,000 deposit can quietly turn into $10,000 circulating in the economy. Money multiplying, loans expanding, credit growing, all from a single deposit. This process is what economists call money creation, not by governments, not by printing presses, but by banks. And while this system has powered economic growth for decades, it comes with a very dangerous weakness, a weakness that only becomes visible during moments of panic. Moments when people begin asking a terrifying question, a question that can trigger financial chaos. What if I withdraw my money right now? Because if enough people ask that question at the same time, the illusion holding the system together begins to crack. And history shows us exactly what happens next. For decades, the system works quietly. People deposit money, banks lend it, businesses grow, economies expand, everything appears stable. But this stability depends on something extremely fragile. Not gold, not vaults, not government guarantees, just belief.
I believe that money will be there when I need it. That's the peace of mind we aim for.
The belief that your money will be there when you need it. Because the moment that belief cracks, the system begins to shake. And history shows us that it doesn't take much. Sometimes, all it takes is a rumor. A whisper spreads. Someone heard the bank might be in trouble. Maybe a bad investment, maybe rising losses, maybe just uncertainty. At first, only a few people react. One customer walks into the bank, withdraws their money. Then another person hears, and another. Suddenly, a line begins to form. But here's the dangerous part. Once the first few people withdraw, others begin to wonder. What if they know something I don't?
Come on, hurry up.
Is it working? I'm so scared.
Everyone's taking too long.
Please, I need my money.
Fear spreads faster than facts. Within hours, dozens of people arrive. Within a day, hundreds, then thousands. Each person thinking the same thing. I need to get my money out before everyone else does. And that's when the terrifying reality of modern banking reveals itself. Because if enough people show up, the bank simply cannot pay everyone back at once. Not because the money vanished, but because the money was never all there in the first place. This is what economists call a bank run. And once it begins, stopping it becomes incredibly difficult. The world learned this lesson the hard way. In the early 1930s, during the Great Depression, fear swept across the United States. People began losing jobs, businesses failed, and suddenly, millions of people started asking the same question. Is my money safe? At first, only a few banks experienced withdrawals, but panic spreads like wildfire. One bank run triggers another. People see lines outside banks and assume something must be wrong. They rush to withdraw their savings. Soon, banks across the country begin running out of cash. Not because they were empty, but because their money was tied up in loans. Loans that could not be repaid instantly. Within just a few years, over 9,000 banks collapsed. Life savings vanished. Businesses shut down. Families lost everything, and the financial system nearly stopped functioning entirely. Governments realized something terrifying. The banking system could collapse. Not because it was broken, but because people stopped believing in it. Trust had become the most important currency in the entire system. Without it, everything falls apart. After the devastation of the Great Depression, governments knew something had to change. The system needed a safety net, something powerful enough to stop bank runs before they destroyed the economy. So they introduced new protections: deposit insurance, central banks, emergency lending programs. In the United States, the government created the Federal Deposit Insurance Corporation, known as the FDIC. This agency guarantees deposits up to a certain amount. If a bank fails, the government promises to repay customers. The idea was simple. If people believe their money is protected, they won't panic. And if they don't panic, bank runs won't start. But this solution created a new reality. Modern banking is no longer just about banks. Behind every bank, there is now a powerful institution standing in the shadows. The central bank, an institution with the ability to create money, inject liquidity, and rescue failing banks. But even this safety net has limits, because in today's world, banking has become faster. Digital, instant, money moves at the speed of a tap on a screen, which raises a chilling question. If panic spreads in a world where billions of people can move their money instantly, could the system survive another bank run? Or would it happen faster than anyone could stop it? For most of the 20th century, bank runs happened in person. People stood outside bank buildings, waiting, watching, growing more anxious by the minute. But today, bank runs look very different. They happen silently. No long lines, no crowds, just a screen, a button, a transfer. Because now, billions of people carry their bank in their pocket. And that changes everything. In the past, withdrawing money took effort. You had to travel to a bank, wait in line, speak to a teller. Today, you can move your money in seconds. Tap, transfer, done. And if thousands of people start doing that at the same time, the speed of panic becomes terrifying. A modern bank run doesn't unfold over weeks. It can happen in hours or even minutes. And the financial world got a frightening reminder of that reality recently. In March of 2023, something unusual happened. A major bank began experiencing trouble. At first, only a few investors noticed, but within hours, news began spreading online. Social media exploded with speculation. Financial analysts started warning about liquidity problems, and suddenly, depositors began withdrawing money, not by visiting the bank, but by tapping their phones. Billions of dollars left the bank in a single day, then billions more. The withdrawals were happening so quickly that the bank couldn't raise cash fast enough to keep up. Within just 48 hours, the institution collapsed. It became one of the fastest bank failures in modern history. And it revealed something deeply unsettling. In a digital world, panic travels faster than ever before. Trust can disappear instantly. And when trust disappears, even a large bank can fall with shocking speed. Right now, millions of people are checking their banking apps. Balances appear steady, stable, reliable. The numbers feel real. But behind those numbers, a complex system is quietly moving money around the global economy. Loans, investments, credit, debt, all connected, all dependent on one fragile assumption, that people won't demand their money all at once, because if they did, the system would face a problem it was never designed to solve. Banks can lend money, banks can create credit, but they cannot instantly produce cash for everyone at the same time. And that's why the entire financial system relies on something surprisingly simple: confidence. As long as people believe the system works, it does. But if belief disappears, the consequences can spread quickly. So what does all of this mean for you? It means the number in your banking app is not a pile of money sitting in a vault. It's something very different. It's a claim on a system, a promise that the bank will provide your money when you ask for it. Most of the time, that promise works perfectly. The system functions. Transactions flow, economies grow. But the stability of that system depends on a delicate balance. Because banks lend, businesses borrow, money circulates, and trust holds everything together. That trust is the invisible foundation beneath modern finance. Without it, the entire structure would begin to shake. So the next time you open your banking app and see the number on the screen, remember something most people never think about. Your money isn't sitting still, it's moving, working, circulating through a vast financial network, a network built on credit, confidence, and belief. And as long as that belief remains, the system continues to function. But if that belief ever breaks, well, the question everyone will suddenly ask is the same one we started with. Where is my money really? However, the global banking system runs on one fragile thing: trust. Every day, billions of people wake up believing their money is safe inside a bank. But as we've seen, the system behind that belief is far more complicated than most people realize. Banks don't simply store money, they move it, multiply it, and sometimes risk it. And as long as people continue to trust the system, it keeps working. But history has shown us something important. When trust disappears, everything can change overnight. So the real question is this: how stable is the financial system we depend on every single day? If you found this video insightful, consider subscribing to Money Mechanics, where we explore the hidden systems behind money, banking, and the global economy. Because the more you understand how money works, the better prepared you are for the future.